Welcome back to my channel for another video. So this is a little bit different again. So today's trade is the end of the New York session. Alright, so what you'll find is basically between kind of like 8:15 London time and 9 PM London time again, you're either going to get a sell-off or you're going to get a rally. Okay, that's how the stock market works, you know, most of the time. Now there is occasions where it'll just kind of consolidate, but quite a lot of the time what you'll have is you'll have a sell-off or you'll have a rally, all right, at some stage. Now it might end off, you know, consolidating, but between the times of 8:15 and 9 PM again London time, you have this opportunity to take a long or short position. Okay, so that's what happened on this occasion, right? It started selling off initially, but I waited. Okay, I waited for my entry, and again I've been telling these guys my entries are all based on price action and my trades are based on patterns that I've identified over a long period of time. So you'll see my entry on this long position, and it's not a random entry, okay, it's a clinical entry. All right, perfect entry, this one again, really good. Some little pullbacks. But this is the thing, when you enter these trades, you're gonna go into the red, you're not gonna go straight into the green. All right, why? Because you're gonna enter a position and it's gonna pull back, okay, and then it's gonna make a new high, then it's gonna pull back, then it's gonna make a new high, then it's gonna pull back, then it's gonna make a new high, and it's gonna keep on doing this. So as long as it's making a new high, you can hold your position. It's only when it stops making a new high that you need to consider that you might have to take a loss or get out when you're in a small green position. All right, so this is a really quick trade. These are the ones that I like. Okay, these are the ones that I like, the really quick trades, not the trades that take 20 minutes. They scare me. All right, so I like these ones, a nice quick trade. All right, so you know, I aimed for 200, but I didn't get 200, I got 170. Oh God, what a shame, you know, that's 2 days salary for about 5 minutes work. Oh, poor me, right? But again, it's a classic example, guys, a classic example, you know, of precision entry. You know, I don't always have it precision entry, but yeah, as I've said before, that has to be your mindset. Your approach has to be precision. Okay, so before we get into the trade, make sure you smash that like button, and also make sure that you subscribe to my channel for more videos like this. So another video, guys, something completely different again. Okay, something completely different again. So this is the end of the New York Stock Exchange session, so enjoy this video. Okay, so I've just taken a long position on the Dow, so this is towards the end of the New York session. Okay, I'm trading here with 60 contracts on the Dow. So you know, if you watch my previous videos, you'll see why I've taken my long entry. I mean, look at that last red candle, look at the size of that tail. You know, I've spoke about this before, about identifying price action. I've explained to you how to identify price action, and again, this is another classic example as to why price action is so vitally important. Okay, so my entry here, it's not a random entry. This is towards the end of the session, and towards the end of the session, you're either going to get a rally or you're going to get a sell-off. Okay, in this instance, it's definitely a rally. So you can see that red candle, look at the size of the tail on that red candle. That's where it's hit support. All right, then you've got the next green candle, and that's where my entry was. All right, so I am currently down, but I'm gonna hold this because I'm confident. I've told you this before, I've seen these patterns play out, I see them unfold before my eyes. I'm gonna hold this, I'm very confident here. All right, I know how much I'm willing to lose here. However, I'm very confident. It's starting to take shape now. It's starting to take shape, and again, this is a beautiful example. I'm gonna hold this now. I'm definitely gonna hold this. You know, why am I holding it? Because I've told you this before, history repeats itself time and time again. Time and time again, history repeats itself, and it's only when you've spent a lot of time in the market, you know, that you get to identify these trends. All right, so I was in the red there just a little bit, and now I'm green, but I'm gonna hold this. I am gonna hold this. Oh, look at the size of that. That's a beautiful big green candle. I'm definitely gonna hold this 100%. Let's see what we can get out of this. I'm gonna aim for a quick 200 on this. Let's see if we can get to 200. Alright, so here we go. It's still going bullish. It is definitely still going bullish. That's another little, that's going to turn into a green candle. That is just longs liquidating positions and then causing the price to temporarily pull back, but that should go back up again. You know, I keep saying to these guys, history repeats itself time and time again. You know, you get to read these, you know, these candles and, you know, the price action. You get to read it. Look at that. So I'm going to continue to hold this. Okay, I'm going to aim for about 200. All right, now listen, if it starts pulling back too long, you know, too long a pullback, I'm just going to take the 100 even. I would rather take the 100, but I'm confident that I'm going to get more than that, because look, it's pulling back and it's making a new high, pulling back and making a new high. Now, this is a classic example of price action. So I'm going to get out here now pretty soon, because I think it's just about to hit resistance there or thereabouts. So you can't get greedy, right? You cannot get greedy. I know where I can push it to, all right, and it's coming towards the limits now. I'm gonna just take this, right? I'm gonna take this and gonna get out. So guys, there you have it, £170 for a few minutes work again. Okay, so the reason that I've put this video out this week is, you know, awareness is key. I've said before, in every single aspect of life, okay, awareness is key. And the thing about it is, you know, what I'm telling you here is that you can trade 3 times a day, or you can trade once a day, you know, on one of these time scales. You know, so if you're working shifts, maybe you're working, you know, on the west coast of America and you're working a night shift, you know, at midnight you could trade the European Open. Okay, so 8 AM London time, you know, that would be what, midnight on the west coast of America, in California, for example. You know, and if you couldn't do that, you know, does the New York Stock Exchange open at 2:30 London time? You could do that, and then again the close of the New York Stock Exchange between 8:15 and 9 o'clock again in London time. So if you weren't aware of these opportunities, well, now you are. You know, if you're working shifts, you know, maybe it would be easier for you to trade the New York Open, or maybe the European Open. Okay, so it gives you the opportunity to trade these 3 different times, and maybe you're lucky enough, you know, that you can trade, you know, these 3 times. Like myself, I have an opportunity to do that, luckily enough. And so that's what this week was about. This week was about bringing awareness that you can trade at 3 different times, okay, depending on your lifestyle. Okay, so again, guys, all my trades are based on price action. You know, my entries are based on price action. My overall trade is based on these patterns that I've identified over a long period of time. And remember, history repeats itself time and time again. And guys, listen, I don't always have winning trades. I've got losing trades as well. Of course I do. You don't just win. There has to be some losses. But the key element is that you cut them losing trades quickly. Okay, don't hold on to them. Cut them quickly. Cut them quickly. Protect your capital. Okay, that's what you must do. Protect your capital. Cut these losing trades. So I hope you enjoyed this week's video. Next week, again, we'll try and do something a little bit different again. If you haven't already done so, make sure that you smash that like button and also subscribe to my channel for more videos like this. So I hope you enjoyed this week's video, guys. Hopefully a little bit more awareness of different times that you can trade. And I'll see you again next week for more videos. Have a good week.